Every day, we rely on strangers to protect our private information. Whether it's a doctor's office, a creditor, or a government agency, we expect our information to be kept confidential and used for legitimate business purposes only. Just like us, our clients expect their information to be protected as well, and we have a legal and ethical obligation to fulfill that expectation. Our clients are understandably concerned with their private information being misused, mishandled, and in the hands of people that shouldn't have it, all of which could ultimately lead to identity theft. And we should take this responsibility very seriously because we are being trusted with sensitive information, and abusing that trust by disclosing federal tax information is a criminal offense, and you can be held liable. To help you understand what you can and cannot disclose as a DSS employee, the federal tax information we're talking about can be accessed using menu items 3 and 4 from the CHIP Federal Inquiry menu. These choices allow you to access the BEERS and IRS screens. The information found on these screens is confidential, and access to these systems is evaluated based on current job functions. In other words, do you need to know? And keep this in mind, FTI screens are monitored through CHIP reports. United States Code Title 26, Section 6103 limits access to FTI and disclosure of FTI to certain circumstances, such as for use in tax administration, investigation of federal crimes, or for certain government agencies to administer services. This law provides strict guidelines for the use of tax returns, return information, and disclosure of that information. Keep these tips in mind when using FTI. Remember that information accessed through BEERS and IRS should serve as lead information only and must be verified before it can be used for case action purposes. Do not copy or scan information found on these screens. However, notes can be made such as BEERS checked, no hit, IRS checked, hit, or lead information needs to be verified. If FTI is accidentally printed, it should be shredded immediately and recorded on a destruction log. If it cannot be shredded immediately, it should be kept in a locked cabinet until it can be. FTI found in case records should not be imaged. It should be logged and shredded immediately or locked in a cabinet until it can be. Log off the mainframe session if you leave your desk for any reason, or if someone without a need to know comes into your office. Position your monitor so it cannot be seen by passers-by. If someone is in your office while you are accessing FTI, ask yourself, does this person need to know this information? Viewing information which is not required for eligibility determination. Sharing FTI with someone that does not have a need to know, including coworkers. Unintentional access, such as keying in the wrong Social Security number, should be remedied as soon as possible by exiting the screen. UNACs may be intentional or unintentional, but the penalties are potentially the same. Knowing and willfully disclosing FTI to someone not authorized to receive it, or willfully accessing tax data without a business need to do so, are both criminal offenses. The penalties for failure to safeguard FTI can include fines up to $5,000 and imprisonment of up to 5 years. Civil penalties without limits may also be imposed if FTI is accessed by an unauthorized person or is shared by an authorized person with someone that does not have a need to know. We have covered the basics of protecting federal tax information. To learn more about how you can protect FTI and yourself, follow the tips in the Disclosure Awareness Pocket Guide. And for more detailed information, you can access IRS Form 1075 from the websites listed here.